Hey, thanks, Sam. Hello, everyone. Thanks so much for tuning in. Today we're going to be talking about appraisals. And in January of this year, on January 18th, there were two rules issued that had to do with appraisals. One was done on an interagency basis. And why? Because that's the way Congress required it to be done, and that is the main subject of our webinar today. It is a set of changes to Regulation Z that establishes new appraisal requirements for what the law originally called higher risk mortgages. Thank goodness they ditched that terminology in the final rule because they realized it would be confusing. But when you look at the statute, it's higher risk mortgages. At the same time, the Consumer Financial Protection Bureau made changes to Regulation B relating to appraisals. And because the two are somewhat intertwined, we've chosen to give you a capsule summary of the Reg B changes as well. But when we get done with today's program, you're going to understand how the new interagency rules that amend Reg Z work, what they require in terms of a certified or licensed appraiser, regardless of the transaction value, what loans are actually affected by the new requirements. We're going to talk about the so-called flip loan appraisal requirements that under which you have to obtain an additional appraisal from a separate appraiser that covers some factors that aren't typically covered in a standard appraisal. We'll talk about what you will need to do if you have a potentially covered loan in terms of looking at when the seller acquired the property to determine if you're going to have to get one of those new flip loan appraisals. And then we'll talk about the new disclosure and the timing impact of this new rule and how it will affect your closing. When we quickly go through the Regulation B appraisal-related changes, we'll talk about what types of loans those apply to, what types of borrowers, what your disclosure requirements are, what the requirement is to provide a copy of any valuation or appraisal. We'll talk about how the Reg B changes impact your timing on consummation of a closed-end loan or opening of an account on opening credit. We'll talk about a special new waiver that's very different from most of the waivers that you encounter within the various regulatory requirements. And we'll talk about prohibitions against charging for copies of the appraisals and valuations under both Reg B and Reg Z. So you can find information about both revisions at the CFPB's website. And Jack's going to start us out by giving us the scoop on the Reg B appraisal changes.
Thank you, Mary Beth. Hey, it's summer times. Well, not officially yet, I don't guess, but the television stations are in reruns, so maybe we can be doing some reruns too.
That's right.
We covered this material on ECOA back on February 28th in detail, rang over every little bit of it. Today, I talked Mary Beth into letting me very quickly just recap these requirements because there is quite a bit of interplay between these Reg B rules and the Reg Z rules we're going to do in detail in just a minute. It just mystifies me why Congress decided they needed to require twice that you give a notice and twice that you give the borrower a copy of the appraisal. Why didn't they just put the rules in one and then, for example, in Reg Z say, yeah, give a copy and give a notice as required by Reg B? When they doubled up on them, it really creates a mess. You know, by itself, the Reg B rules are pretty simple. by themselves. The Reg Z rules, they are more complicated. There's more to them. But the issue about the notice and the disclosure is fairly straightforward. But when you try to figure out which one do we comply with, B or Z or both, and if we got to comply with both, it's crazy. It really gets a little sloppy. So what do we got here? On page 3, we give you the background. ECOA, Reg B, no big surprising stuff there. Over on the next page, we talk about electronic disclosures, and, of course, the notice and the disclosure we're talking about here can be delivered electronically, but you got to comply with the old E-Sign Act. On page 5, here's where we start talking about something. Basically, the rule here says that an applicant has to receive a copy of all appraisals. Well, generally when you do an appraisal on a mortgage transaction, you get one appraisal. So why would they say all? Well, you'll find out a little later. In Reg Z, as Mary Beth mentioned already, in certain cases, if you got an HPML flip, you got to do a second appraisal. So we'll get into that a little bit more. The Reg B rules, again at the top of page 5, you got to give a notice, you got to give a copy of the appraisal when you have credit that is to be secured by a lien on a dwelling. Now here you got to remember, we're talking about Reg B. And Reg B, as opposed to Reg Z, is very broad. Reg B applies to any kind of credit. Business loan, farm loan, consumer loan, they're all covered. But this only applies if you have a first lien on a dwelling. Now, those of you that have been around compliance for a while, you know very well that Reg B already requires you to give a notice and give a copy of the appraisal, and that's on any loan secured by a dwelling. So actually this new requirement is slightly narrower than what you have currently, because the new requirement only is triggered when you have a first lien on a dwelling. So a little change there. This copy of the appraisal has to be provided promptly upon completion or 3 business days prior to consummation, whichever is earlier. Now, we're going to elaborate a little bit on what's promptly before completion and what is the 3 business days, and try to clarify some of these concepts as we get a little bit deeper into things here. The second section down the page says if you've got multiple applicants, you only have to give the copy of the appraisal to one. You want to give everybody a copy, you may do so, but you only have to give it to one, and that person has to be a primary applicant. Down at the bottom of the page, we talk about multiple versions. Although you usually only get one appraisal, you may go through various variations on that. You get one in, you review it, it's flawed, you send it back, you get it fixed, you get another one. You only have to give a copy of the latest version. Now, if you gave a copy of an early version as soon as you got it, which I don't know why you would do that, but then you reviewed it, you found problems, you get a later one, you still got to give a copy of the revision. The latest one, the final one, is the one you have to give. You don't have to give that early one, but if you already gave it, you'd still have to give the latest version. All right, over on page 6, we get into the, give my page a jump here. There we go. We talk about the coverage again. First lien on a dwelling. Remember that Reg B is very broad. It applies to business loans, consumer, farm loans. All of those things would be covered. On page 7, we get into the timing rules a little bit. And again, when it talks about you have to provide, that means deliver. And delivery occurs 3 business days after you mail it. So somebody comes into the bank and you hand them the appraisal, you have provided it, you have delivered it at that time. If you're going to mail it, you mail it, and they're deemed to have received it 3 days later. So if you want them to get it 3 days before consummation, if you're mailing it, you got to mail it 6 days before. Now, folks, the timing rules here are not extremely complicated, but the timing rules will probably slow down.